Hey there, if you're like most people, the investment world can seem pretty confusing. But don't worry, in this video, we'll introduce you to the basics of investing and show you how easy it can be to get started. What is investing? In its simplest form, investing is putting your money into something with the expectation of getting more money back. Now, there are all sorts of different investments from stocks and bonds to real estate and collectibles, but they all share that common goal. Why invest? Most people invest for two main reasons: to grow their money and to protect it from inflation. Over time, investments tend to go up in value, which means your money can grow along with them. And since the prices of goods and services tend to go up over time as well, thanks to inflation, investing can help you keep up with the cost of living. Of course, there's no guarantee that your investments will make money after all. Markets can go up or down at any time. But over the long run, they have a tendency to go up more often than they go down, which is why investing can be such a powerful tool for building wealth. Why investing is so important? There are a lot of good reasons to invest your money. For one thing, it's a great way to grow your money over time. But investing is also important for another reason: it can help you keep up with the cost of living. Prices for goods and services tend to go up over time, thanks to something called inflation. Inflation is when the prices of things start to increase, and it happens when the economy is doing well. That's because when there are more people working and making money, they have more money to spend on things like houses, cars, and food. Investing can help you keep up with inflation because investments tend to go up in value when inflation goes up. That's why it's important to start investing early on in life, so that you can take advantage of the power of compounding. Compounding is when your money starts to make money, and then that money starts to make more money. It's like a snowball rolling down a hill. It starts small, but it gets bigger and bigger the longer it rolls. And the sooner you start, the longer you have for your money to compound. Over time, compounding can have a huge impact on your wealth. In fact, Albert Einstein once called compounding the eighth wonder of the world. So now that we know why investing is so important, let's take a look at some of the different types of investments out there. Different types of investments. There are all sorts of different investments you can make, but they can generally be divided into two categories: stocks and bonds. Stocks are a type of investment that represents ownership in a company. When you buy a stock, you're basically buying a tiny piece of that company. And as the company does well, the value of your stock will go up. Bonds are a bit different. They are essentially IOUs. When you buy a bond, you're lending money to a company or the government. In exchange, they promise to pay you back that money, plus interest, over time. There are also other types of investments, like real estate and collectibles. But for most people, stocks and bonds are the best place to start. How do I start investing? The first step is to figure out what kind of investor you want to be. Do you want to be hands-on and pick each investment yourself? Or would you rather leave it to the professionals and let them handle the day-to-day decisions? Once you know what kind of investor you are, you can start thinking about what kinds of investments might be right for you. If you're the DIY type, you might want to consider buying individual stocks or exchange-traded funds, ETFs. These give you the ability to invest in specific companies or groups of companies, and you can buy or sell them anytime you want. On the other hand, if you're looking for a hands-off approach, you might want to consider investing in mutual funds or target date funds. These are managed by professional investors, so they come with a higher price tag. But they can also offer peace of mind knowing that someone else is taking care of your money. No matter what route you decide to go, the important thing is to get started. Investing can seem daunting at first, but it doesn't have to be. Just remember to start small and stay disciplined, and you'll be on your way to success in no time. Benefits of investing. There are all sorts of different benefits that come with investing. For starters, it can help you grow your money. Over time, investments tend to go up in value, which means your money can grow along with them. And since the prices of goods and services usually go up over time as well, thanks to inflation, investing can help you keep up with the cost of living. Investing can also help you protect your money from taxes. In most cases, the government taxes investments when you sell them. But if you hold on to an investment for a long time, you may be able to take advantage of what's called a capital gains tax break. This allows you to pay a lower tax rate on your profits, which can save you a lot of money in the long run. Finally, investing can also help you diversify your portfolio. By spreading your money around, you can reduce your risk and make sure that your eggs aren't all in one basket. That way, if one investment goes down, you're not wiped out completely. What beginners should consider: 10 detailed factors. If you're new to investing, there are a few things you should keep in mind. Here are 10 factors to consider before you start. 1. Your goals. The first step is to figure out what you want to achieve with your investments. Do you want to save for retirement? Buy a house? Build up a rainy day fund? The answer will help determine what kinds of investments are right for you. 2. Your timeline. How long do you have to reach your goals? If you're investing for retirement, you'll have a longer timeline than if you're trying to save for a down payment on a house. That means you can afford to take more risks with your investments. On the other hand, if you need your money sooner, you'll want to be more conservative. 3. Your risk tolerance. How much risk are you comfortable taking? This is an important question to ask yourself, because it will help dictate what kinds of investments are right for you. If you're okay with a little volatility, you might be able to handle more volatile investments like stocks. But if you prefer stability, you might want to stick with more conservative options like bonds. 4. Your financial situation. What is your current financial situation? Do you have any debt? How much money do you have saved up? These are important questions to ask because they can help determine how much risk you can afford to take with your investments. If you're debt-free and have a solid savings cushion, you can afford to take on more risk. But if you're carrying a lot of debt or don't have much in the way of savings, you'll want to be more conservative. 5. The stock market. The stock market can be a great place to grow your money over time. But it can also be volatile, which means there's a risk of losing money. If you're considering investing in the stock market, make sure you understand how it works and are comfortable with the risks involved. 6. Bonds. Bonds are another popular investment, and they tend to be less volatile than stocks. That means they are a good option if you're looking for stability, but it also means that they may not offer as much growth potential. 7. Mutual funds. Mutual funds are a type of investment that allows you to pool your money with other investors and then have it managed by a professional. They can offer diversification and professional management, but they also come with fees that can eat into your returns. 8. ETFs. ETFs, or exchange-traded funds, are a type of investment that's similar to a mutual fund, but they tend to be more flexible and have lower fees. That makes them a good option for investors who want to keep costs down. 9. Real estate. Real estate can be a great way to build your wealth over time, but it's also a big commitment, so make sure you're ready before you take the plunge. 10. Other considerations. There are other factors to consider as well, like taxes and inflation. Be sure to do your research and understand all the different aspects of investing before you get started. 6. Investments for beginners. If you're just getting started in investing, here are 6 options to consider. 1. Savings accounts. Savings accounts are a great place to start if you're new to investing. They are low risk and offer a modest return, which means you won't have to worry about losing money. And they are easy to set up and manage, which makes them a good option for beginners. 2. CDSL certificates of deposit. CDS are another safe option for beginners. They typically offer higher interest rates than savings accounts, but there is a bit more risk involved. That's because you'll be locked into the CD for a set period of time, and if interest rates go up during that time, you won't be able to take advantage of it. 3. Money market accounts. Money market accounts are similar to savings accounts, but they typically offer higher interest rates. They also tend to have higher minimum balance requirements. But like savings accounts, they are a safe place to invest your money. 4. Bonds. Bonds are a good option for investors who are looking for stability. They tend to be less volatile than stocks, which means there's less risk of losing money. And they offer a fixed return, which can help you plan for the future. 5. Mutual funds. Mutual funds are a type of investment that allows you to pool your money with other investors and then have it managed by a professional. They can offer diversification and professional management, but they also come with fees that can eat into your returns. 6. ETFs. ETFs, or exchange-traded funds, are a type of investment that's similar to a mutual fund, but they tend to be more flexible and have lower fees. That makes them a good option for investors who want to keep costs down. How much money is needed to start investing? There's no set amount of money that you need to start investing, but in general, it's a good idea to have at least a few $1,000s saved up before you begin. This will give you a cushion in case you lose money on your investments, and it will also help you diversify your portfolio. What are the best investments for beginners? The best investments for beginners depend on your goals and how much risk you're willing to take. But in general, savings accounts, CDS, and money market accounts are good options if you're looking for safety. And bonds, mutual funds, and ETFs can offer some growth potential. Just be sure to do your research before you invest so that you understand all the risks involved. How do I start investing with little or no cash? There are a few ways to start investing with little or no cash. One option is to use a robo-advisor, which can help you invest without having to put down a lot of money. Another option is to invest in mutual funds or ETFs that have low minimum investment requirements. And finally, you could consider using dollar cost averaging, which allows you to invest small amounts of money over time. How can I invest and make money daily? There's no guaranteed way to make money from investments every day. But one strategy you can consider is day trading, which involves buying and selling stocks within the same day. This can be risky, but if you're careful and do your research, it can be a way to make money. Is investing in penny stocks worth it? Penny stocks are a risky investment, but they can offer the potential for big rewards. If you're thinking about investing in penny stocks, be sure to do your research and only invest an amount of money that you're comfortable with losing. Which trading is best for beginners? There are a few different types of trading that you can consider as a beginner. One option is to buy and hold, which involves buying stocks and holding onto them for the long term. Another option is to trade based on technical analysis, which looks at charts and other data to try to predict how the stock will move. And finally, you could day trade, which involves buying and selling stocks within the same day. Risks in investing. Of course, there are also some risks that come with investing. For one thing, there's the risk of losing money. Unlike a savings account, which is insured by the FDIC, investments can go down in value as well as up. So if you're not careful, you could end up losing some or all of your original investment. There's also the risk of fraud. While most investments are legitimate, there are always a few bad apples out there. That's why it's important to do your homework before investing in anything. Make sure you understand what you're buying, and don't be afraid to ask questions if something doesn't seem right. So there you have it, a quick overview of investing for beginners. Now that you know the basics, it's time to start thinking about how you can get started. Just remember to start small and stay disciplined, and you'll be on your way to success in no time. Thanks for watching.